please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Ashwani Mitesh with us for BTST Calls. Ashwani, you go first. I'm assuming that you believe that this is a fresh expansion, so you would carry home the bank name, or you advise carrying home the shorts. But what about individual stocks?
See, individual, Arvind is a sell with a stop of 420, target of 405. Although it's Akshay Tritiya, but all the jewelry stocks are lower.
Yes.
So PC Jeweler is a sell with a stop of 300, target of 275. And maybe an odd NTPC is a buy with a stop of 176, target of 188. The momentum which we are coming off indicates that there is a multi-day correction that's waiting to happen. Post that, maybe the rally will resume. But for the moment, next 2-3 sessions could be soft.
Oh yes, just pull out the intraday chart of not just PC Jewelers but Titan as well. Last 3 or 4 Akshay Tritiya, if you see, they rally a day ahead of Akshay Tritiya, but on that day there's a sell-off. So even if something like a Titan, PC Jeweler in particular, in fact, is getting a thrashing now. Just look at that stock intraday, 4% lower is what we have on that one.
Absolutely. I was just looking at intraday move on the Nifty as well, Anuj. I mean, it is a 100-point drop, near 100-point. We'd almost touched that 10,600 mark. So can't take away from the fact that it's been a quite swift reversal. Okay, more trading ideas coming for you. Mitesh, last half hour, what are you going with?
Yeah, so I have one buy and one sell. I think clearly it's the banking pack, where the trouble looks more pronounced. So Indian Bank for me is a sell with a stop at 315 for targets of 295. I think it's already started coming off the levels, but can be shorted now as yet. And one buy, that's Tata Global. I would buy that. Sorry, Godrej Consumer. That's a buy with a stop at 1120 for targets of 1155.
Okay, Mitesh, thanks a lot for those trading ideas. Well, our alpha manager for today is Tahir Basha, CIO Equities at Invesco Mutual Fund, who now joins us on the show. Tahir, hi, good afternoon. Thanks a lot for taking time out and joining us in our studios.
Thank you for having me.
A lot of your stocks have done well, Tahir. I think you were one of the big investors in Mishra Dhatu. So, of course, we'll talk about it later. But, your sense of what kind of market we are in right now, still good time to just go out and accumulate mid-caps, large caps?
Yeah, I'm kind of incrementally more constructive on the markets than what we were probably, say, about 3-4 months ago. And I think this correction, for whatever reason it has come about, is offers some decent entry points now. Maybe the whole valuation-related burden that we probably as investors or fund managers were facing for a fairly long period of time has now kind of become a little more reasonable. So I think it is much easier to ideate now. It is much easier to probably look at many companies. Probably even in the mid-cap space now, because where the corrections have been even more stiffer. So I think I'm kind of reasonably confident now about the market. We'll have to, of course, the most important thing now going forward will be the way the result season pans out and what kind of delivery that we have against expectations and how do we set the tone for the next financial year. But so that remains to be seen. But if we were to probably be on track and maybe do a little better than what market expects, then I think we are back in focus, and I think markets have corrected quite well, probably largely on the fear of the debt markets, which is also kind of receded in the background. So I would think that I'm a little more constructive now in the market compared to what I was probably 3 months ago.
So let me ask you about the question that everybody's been wondering. What is with this stock, this Mishra Dhatu? I mean, I'm not going to ask for levels, etc., but just generally, what did you read in the IPO? And has something changed? Is there some international talk of, Nigel was telling me the talk of sanctions on Russia. Is that indirectly helping this 40-50% move?
No, for us, I think it was essentially a very simple kind of a story, growth at reasonable price, and that's what we went about banking on. And it met all our conditions in terms of the way we look at investments and we look at our investment process. So basically, it's a company which is a near monopoly in this business and has been growing at about 20% quite consistently over the last 4 or 5 years, and healthy margins, healthy return on capital, ROIs of 25-30%. You don't really expect a lot more from these kind of companies, especially when they come to you at about 11-12. P multiple. So this was something which kind of took our attention, and this is how we have. I mean, this is how we've looked at not just this IPO but all other IPOs. And
but any specific triggers why we've seen this after?
I don't know. I mean, it's even we didn't expect this kind of a monster move, but we thought that it could be a good 20% kind of CAGR, and we probably got 60-70 more than what we bargained for in less than 7 days. So I think It's probably because it's been an ignored stock. It came at a time when attention was so much more focused towards many other things. So I think that probably just helped us in a way, I guess.
Yeah, and one of those stories where this whole adage of, don't buy the IPOs, that, of course didn't work. This has just been one of those issues where,
Yeah, I think I was surprised that many people didn't even know the name of the company, and they didn't know what it did, and I was surprised that it was completely ignored. Probably it was caught in the crossfire of many other IPOs. But
I think a lot of people won't know what dhatu means, actually, frankly speaking. That's a fact. It's a sad fact that we are right now. Someone just asked me, what is Vistar mean? It's like,
yeah, I can relate to that.
It happens. Yeah.
I mentioned it. I mentioned the short form of the name to one friend of mine, Bidani, and he said that it doesn't sound like a PSU. So I said, I don't know. So I just
then you get the dhatu nigam
exactly. Then it hit him.
Okay, and that's of course about Mishra Dhatu, but I'm looking at your portfolio, and you've made your investors rich. Britannia, Heritage Foods, United Breweries, Titan. We were just discussing it in last segment as well. Most of them are now at lifetime highs. Is this a case of valuation re-rating, or is this a case of market now pricing in some stupendous CAGR in earnings?
So, of course, yeah, as you rightly said, we made decent amount of money. Valuations are a bit of a concern in some of these names at these levels. Not concern, but I mean, we know that they are not the best of valuations that we would probably want it to be at in terms of, further buying opportunity here. But we know that these are reasonably compounding stories. They've got their own merit in terms of their unique positioning in their respective sectors. So I think to that extent we are happy owning them still, and it is part of the fund which is meant to be growth oriented. So we are pushing as much of growth in this portfolio as we can in the portfolio where these happen to be. So I think we are fairly sanguine about these names. Of course, we're happy to buy them if at all they're correct. So that's how we look at it.
That's exactly the question that I was going to ask you. Great businesses, if you have them as a fund manager, I'm sure you're feeling very comfortable. The question is the additional cash that's coming in, can it still go into a Titan? Can it still go into a Jubilant FoodWorks? I mean, those kind of names at these valuations?
So not very easily. As I said, that these are not where we would probably be immediately putting our incremental money. But the good part, what has happened in the more recent time, like as I mentioned, is that many of the other parts of the market have actually seen a correction. So we are seeing opportunities somewhere else, and we are in a position to now deploy that incremental money.
So not consumption, but you look for different opportunities. That's a valuation sort of shift.
Possibly, yeah. So you can, it may have even been in some consumption names. So for example, there are a couple of names in the FMCG space which are still kind of their trailing valuations, and we find an opportunity out there. It figures amongst some of our top picks, and we are using the incremental money to probably get into those kind of names or add to those positions that we have. So I think that's the way we operate.
In the past, you were very bullish on oil marketing companies. You reckon that story has now played out, and with crude rising and election year, is there a bit of a risk on that story?
So yeah, you mentioned the risks which are there near term, plus the fact that many of these are now embarking or likely to embark on the next round of capex, which is also fairly large across most of these entities. It differs from one to the other, but it's a fairly significant amount. So I think can there be an expectation of further significant re-rating or the possibility of what the story was 3 years ago? It's a little difficult to. I think what we are reconciled now to the fact is that these three companies on the OMCs are likely to be more like utilities, and you have to look at utility kind of valuations, maybe buy them closer to book, a little above book, and then as they approach more than twice book or 2.5 times book, you sell out. So that's the kind of play that they are probably likely to be at, and with earnings growth somewhere in the vicinity of between 10 and 15% on a 2-3 year out CAGR. So I think this is how we can currently think of these companies, and no longer that re-rating possibilities that they were probably 3 years ago. And of course, maybe in the near term it could be de-rating because you are faced with these political challenges and somewhat different kinds of approach to the oil pricing scenario and so on. So.
I'm looking at obviously the largest part of your portfolio, and that is obviously banks and NBFCs. You do have names like ICICI Bank as well in the portfolio. So what now? There's so much of volatility. I mean, just today the comments from the Deputy Governor have really moved the market. How would you approach financials from here on?
So, we've largely stuck to some of the private financials as far as possible, and some of the NBFCs. We've kind of recently added to some of the NBFC positions simply because the fact that some of the fears related to sharp increases in interest rates have probably receded, since the cooling off of the debt markets. And many of the NBFCs have corrected reasonably well over the space of the last 6 odd months. It's been a sector which has underperformed. Many of the housing and mortgage companies especially have kind of corrected. So I think we've increased our position out there. Opportunistically, they have also kind of turned a little cheaper than where they were. So private financials and NBFCs is where we are. Incrementally, we've looked at, as you mentioned, an ICICI bank or a couple of the corporate banks, where we've kind of taken the position that wherever we found the core franchise to be reasonably intact and we've seen incremental stress coming off reasonably, and plus valuations have corrected, it leaves us with a decent value opportunity. They are not, as of now, significant growth plays in our view, but it is a part of the value component of the portfolio that we have. So that's where some of these corporate banks figure in the portfolio.
You have fairly underweight stance on IT. You have TCS, which is of course one of the largest company, but not many apart from that. You can correct me if I'm wrong. And sectoral allocation also only 5.4%. Thoughts on that?
Yeah, so this is this is a growth-oriented fund. Largely, we have about 75% exposure to growth-oriented companies, 25% in value. But nonetheless, the sector has actually still benefited because it takes a position that it doesn't really tend to be zero weight in any of the large sectors. We follow a principle that we'll be not more than 150% overweight and not less than 50% underweight. So as a result, versus a 10% sector, the index allocation, we've got a 5% allocation in IT. And the recent rally in the IT stocks over the last 6 to 9 months has not necessarily therefore bypassed us completely. We have had a presence in companies like HCL Tech, Cyient, etc., and that has kind of stood us in reasonably good stead. And that's something which is a good part of the portfolio, that this fund typically tries to take an exposure to as many sectors as possible, so you don't get left out in any particular sector, and that serves it well. Over a more longer period of time, it works as a natural balancing factor.
Okay, I want to come back to IPOs.
Sure.
What next after Vidhani? What else are you
we'll keep you posted, and you will figure it out. But I think we've had some decent success with IPOs in the recent past, touchwood. So we hope to see. I think we'll try and it's very easy to spot them, because wherever you see people ignoring them completely and they are decent quality businesses, they are good opportunities all the time.
Okay, yeah, I mean, you wish you get one Mishra Dhatu every year and you're sorted. Tahir, thanks a lot for taking time out.
Thanks.
News for the bulls is it's not entirely collapsed. I mean, it's kind of holding now. Yes, there is a decline, but some sense of recovery also coming through. And it is some of the stocks like Hindalco, Vedanta that are seeing incremental buying. ICICI Bank has managed to come off the lows just that little bit. Well, on that note, let's welcome in Dilip Bhatt. He's joining us in the conversation this afternoon. Good to have you on the show. Let me actually start with some of these banks. News keeps coming in on a daily basis. What would you do with the two of them, Axis and ICICI, right now?
Sure, I think that's not an easy question to answer, because I think the opinions are very sharply divided. Without any doubt, both the banks certainly are very good. And the core DNA of the bank, I don't think has been disturbed. So I think taking that as an assumption, I think one would always look to buy the stock at lower levels. How much lower is always a very challenging question for all of us. And the kind of the news that keeps on coming doesn't make it easy. So what I would say is I would still wait for a while to buy some of both the banks. And I would still like the things to settle down, some clarity emerge, and even if I have to buy some 5% higher, I wouldn't mind that. But for the time being, I would prefer to wait and watch till the time these quarterly results are out, and till the time these issues have some kind of, some kind of stability coming in.
Just look at that move on Power Mech. Up quite a bit in this market, and the other stock which has made a move is JP Associates, up about 7.4%. By the way, that discussion that we were having on Godrej Group, that's continuing. Just look at Godrej Consumers move now. 1134 is what we have on that stock. In fact, there was a bit of an intraday dip that you saw on that one. That's been bought. Same is the case with Godrej Industries as well. That one as well has moved to the high point Again, there was a bit of an intraday dip on that one, so but that one has also been bought. And the other one which has been making the highs of the day is IGL. Just pull out that stock intraday. After a long time, you've seen this kind of move on IGL. I mean, it's still flat, but considering that it was down quite a bit, from the intraday basis, there's been quite a bit of move. Dilip, hi, good afternoon. I wanted your thoughts on some of these, white good companies. Voltas, as we speak, is at the high point. Stocks like Havells, considering the kind of summer that we're having right now, and the pricing power with some of these companies, you reckon there's more to go in some of these names?
Absolutely. I think what you have said is very right. I think the intense summer is something which is really playing out, and I think the schemes that these companies are offering are also very attractive. But more important also is the fact that as electricity reaches out deeper and deeper into the villages, I think the not just the affordability, but the possibility that you can buy it because you have got some basic infra in place. I think that also is adding and compounding the growth. And I think that possibly that trajectory will continue over next couple of years for this white goods segment.
Okay, the other area I want to ask you about, Dilip, is this whole hospitality surge that we've seen. Is this just a trading phenomena, 1, 2, 3 days, I mean some summer vacation trade that's playing out? Or do you see it lasting longer because of the kind of valuations that Lemon Tree got, and then therefore a call on ITC?
Well, I think one has to really work and see the model as to what kind of model these people are following. More important is that whether the capital intensity of the business is really going to go up. I mean, Indian hotels for quite some time was in a very huge investment mode. Of course, in the last 2 years, they have really come off that particular thing. I think it goes without saying that if your capital intensity is high and the initial returns are low, so your ROE also becomes much lower. And of course, you have always a question about the free cash flow, but longer term they help you. But I think overall, this industry also, looking at even the airlines industry, looking at the consumer discretionary spending that we are seeing, I think certainly this industry will continue to be on the radar of the investors for, for next couple of years. And certainly some of them would really look very attractive.
Just wanted to point out, Anuj, a couple of stocks. I mean, this is exactly what you were saying on Closing Bell yesterday also. Even today, the index is not doing much, the mid-cap index, but stocks, the way they're shooting up, V-Guard, Delta Corp now. Yeah. We've been speaking consumption all throughout. Exactly. So there's a lot moving beneath the surface, right?
Yes, there is. And, there's, of course, an index trade which is happening, of course, Surabhi. And there's beneath the surface, as you said, a lot of these individual names. So stocks like Delta Corp, you mentioned, there's so many of them. We just discussed the entire Godrej Group. I think that's on fire. That's at the high point right now, most of the stocks. Amara Raja Batteries is at high point, V-Guard, Dabur. So Lever, I mean, a big stock like Lever consistently makes new highs. Same time yesterday, we were talking about that move on Lever, and it's moved another, a percent or so, 0.5% or so. So obviously, there's this one space where there's now a unanimous bull market, which is the consumption sector. It's getting a bit crowded though, but for now, the consensus call, I think, is working here, and stocks are doing well.
Okay, on that note, let's get you some more market opinion. Hear it out from Andrew Holland, CEO of Avendus Capital Alternate Strategies.
Understanding that we've got elections next month, which will obviously make the markets volatile. But the 2-year Treasury in the US and the 10-year Treasury in the US, that differential is only 50 basis points, and whenever you see an inverted yield, usually means that we're heading for difficult times. RBI kind of Goldilocks scenario for the Indian economy of strong growth, no inflation, just doesn't wear well with me. And I think the risk to their kind of targets and inflation is on the high side, rather than I expect them to be to get to those kind of figures. We like private banks, we like selective NBFCs because they will continue to take market share from the PSU banks. There's no doubt in my mind that will happen, so we will continue with that kind of strategy. The only thing that's probably kind of less kind of negative PSU banks is obviously we've seen this electro steel, kind of move towards Vedanta, which will probably give some optimism that the banking sector is getting through the problems and and so forth and so on. I still think we're a quarter or so away, but sentiment-wise, it's probably will keep the sector reasonably buoyant. But that said, there's still a lot of problems out there.
Okay, well, we've just got a couple of minutes to go before the day closes out. Not such a great day for banking, but there have been plenty other stocks that have tried to make up for it. One such segment, Dilip, is metals. Hindalco, for what it's worth, ending at the highest point of the day. Would you advise buying anything here?
Well, I think in the metal space, we still like JSW a lot. We like even JSPL. I think that also is a stock which can really continue to show a good performance on the back of higher capacities and higher capacity utilization and better margins. These two stocks really stand out in our opinion. Maharashtra Seamless is another stock that we are looking at. I think that company also is all set to show a very good growth for next 1.5 to 2 years. And I think the way the international trade is moving and the way the rupee is also depreciating, possibly it's also providing some kind of momentum or tailwind to this particular metal sector.
Okay, about 2 minutes left. I just see the Nifty contribution. I just want to make a point here because there's an ITC which is up about 3%, and after that you're struggling to see. Just look at that, Surabhi. It's rarely that you would see something like this. 19 points, no less. 19 points coming on account of ITC. The next contribution is Wipro, 2 points. And if you see the downside, so out of the 40-point move on the upside, half of it is on account of ITC. And the banks have not done well. That's why the bank Nifty is down 220 points, but Nifty is only down 10 points. And the reason for that is because ITC was the player which was doing still well.
Real heavy lifting by
ITC today. Ashwani, your thoughts on ITC before we wrap up?
Yeah, I think ITC is making a bottom post at GST problems, but it's not really going to go to 400. Maybe next target 320, 325. But it's clear that ITC and Dabur have restarted their up moves today.
Okay, so we are all set to close out. Interesting match between the Bulls and the Bears today. I felt like in that contribution played it was ITC versus the banks. Anuj, how do you sum up the day?
Now see, I think it's all boiling down to risk reward. We've had 9 back-to-back days gains, and so today it was just a bit of a cool-off, Surabhi. The banks, obviously, after the big rally, tomorrow's weekly options expiry as well. So I think sometimes that also plays a part. So we'll find out. But don't take it away from the FMCG consumption basket. That is where the real bull market is, and that is where I think perhaps you should focus on. But in terms of stocks, as we discussed, ITC contributed 20 points. After that, you had Wipro and Ultratech with minor moves. Tata Steel and Vedanta were the other gainers. Bharti Airtel, Cipla as well, up about 1%. So these were a couple of stocks where we saw the move. On the way down, Axis down about 3%. Mahindra and Mahindra was down about 1.5%. Tech Mahindra down about 1.5%. Lupin down 2%. Titan, of course, has had a big move, so some profit taking on that one. And IndusInd was also a bit soft today.
No, the mid-cap index is down 2 points. Don't let that fool you because there was so much going around. And the theme, as Anuj explained, was really consumption all the way. So let's get going. Godrej Consumers, 5.5% on the upside. Let's pull up Godrej Agrovet, Godrej Industries, a lot of the Godrej Group stocks because many of them have managed decent gains today as well. Then we move on to the next set of stocks, Bombay Burma. So the whole concept of whether you should play Britannia through Bombay Burma, that worked very well. It's also a stock that Purenju Elliott spoke about yesterday, 9% up there. More of the stocks that Purenju likes, Kaya, about a 7% up move there coming in. And of course, big boy ITC, which we've already discussed. JP Associates was an interesting play, 8% up on JP Associates, but pull up what's happened to JP Infra. Now, those lessons from steel are definitely being learned, perhaps, because there's some sense of nervousness around all the other stocks. So JP Infra, whether you're looking at a Bhushan Steel today, some of the other names on the side, Alok, etc., all the indebted plays, there was a lot of pain and pressure going in over there. Moving on now, Mishra Dhatu has been shining bright. Once again, a 10% circuit on that stock, no stopping that one. If you talk about other movers and shakers from the consumption space, Parag Milk, Delta Corp, Dabur, big names from the consumption basket, all of them are moving higher. If I talk about more gainers beyond consumption, V-Guard has had a good last hour, big spike coming in, and it's ending smartly positive. There we go, 3.5% up. Amara Raja has been on the upside of the screen as well, so not bad. Hotels, the rally continued in part, so good day for Indian hotels, good day for EIH Associates. Lemon Tree cooled off, that's the one that I'm talking about, so that was slightly lower. So mixed trends on some of these hotel stocks. Let's get Amath Hotels up for you as well. Management was extremely bullish when they spoke to us earlier today. Stock, however, cooled off. Coming down to the losers, not too much really to speak of over here, but Jet Airways definitely stands tall. About a 3.5% decline coming in, make that 4% towards the close on that counter. Obviously, all the PSU banks have been on the weaker side. So your Andhra 2.5% gone from there. Some of the other names like BOB down 4%. So banking, of course, was not a very rosy space today. Anuj?
I think the one stock that you missed, Surabhi, Balrampur Chini, and again, spoke about it in the morning, came out of F&O ban and really in a bear market. So almost a new 52-week low is what we had for Balrampur Chini. It's a deja vu for me to see the move in Balrampur Chini. Last time also, the top was similar, and this time also the top was similar for Balrampur Chini. That cycle has turned, and that stock making new lows now. Dilip, your thoughts on sugar, and you reckon, is there a trade here?
No, not really. I think sugar is, at the moment, as we all know, going through the phase of glut and the falling prices. So I would still stay away from this because apart from being a commodity and a very cyclical kind of scenario, I think there are a lot of headwinds in this particular sector at the moment. So I would prefer to stay away from this sector.
Okay. Ashwani, now that this is closed out, 1% drop on the Nifty Bank, how would you look at things tomorrow?
Well, while this is a correction, it won't be very comfortable if the market just reverses and tomorrow gets past 10,620 thereabouts. But I think if we can consolidate at least near 10,400, 450 and then restart a fresh move, I think then 10,600, 620 will get taken out. This is a tired market, and at lower levels fresh buying should happen. So I'm looking for a bit of a sideways to corrective sort of market for the next couple of sessions, and then we take a fresh call from there.
Okay, yes, point taken. Mitesh, you were also a bit negative on the market in the morning, but your thoughts on whether we are now at support zone, or you reckon there's more to go on downside?
I think I'm negative in the sense that I'm expecting the uptrend to halt, I think, which possibly looks like the case. 10,600, 620 would be a very difficult level. But the decline or, some kind of stronger correction could happen in the Bank Nifty. The intraday charts of Bank Nifty are slightly more on the weaker side. I would still want to see 25,000 being taken out, and once that happens, the correction could get slightly stronger. But Nifty, I still believe that, we might do a range of about 10,600 to about 10,430. And as we approach the upper end of the range, you will see supply and profit booking emerge, possibly negative news also emerge. But unless until you break below 10,430, I wouldn't be really negative big time on the indices. In fact, I would look for some buying opportunities closer to about 10,450. Consumption FMCG stocks clearly, are some areas which are showing more momentum, and maybe, buying those at slightly lower levels of dips could be a very good trading idea.
Key earnings to watch out today. Cement major ACC will be reporting Q1 numbers. Sales volumes expected to lead the top line growth. We have Nigel joining in with more details. Nigel, run us through the fine print.
Well, interesting to see what these numbers throw up really, because the stock was looking a little nervous towards the end of the trading session. In terms of what the poll threw up, well, on the top line, we're expecting a growth of around 9 to around 10%. Remember, that's going to be driven by higher sales volumes. So the sales volumes are expected to rise by around 7.5%, should come in at around 7.1 million tons. At least that's what the number that our poll threw up. So keep an eye out on that front. So majority of the top line growth is because of sales volumes growth, because prices didn't really spike up. In fact, on a sequential basis, cement prices were marginally lower. So no big boost really coming in from the cement prices in a seasonally strong quarter. That's about the top line. But if you're looking at the margins, well, there'll be a bit of a compression there. So despite having a growth on the top line, you're seeing the operating profit will see a decline. That's because, in fact, we have realizations that haven't really moved up, and you have input costs that have spiked up. Pet coke prices that spiked up, diesel prices have spiked up, and on the whole, the freight cost as well will spike up. So higher fuel and freight costs is what's going to hurt the margins. That's why we're expecting a compression of around 250 basis points on. In terms of the profitability, keep an eye out on the tax rate, the effective tax rate. Same quarter last year, in fact, it was at a little below 20% odd. All in all, expecting a mixed set of numbers, margin compression. That's something that the street is looking at. Back to you.
All right, thanks, Nigel, very much for that. Well, Mindtree will also be in focus on the back of its numbers. Dollar revenue growth of about 4% is expected this time around. Rima is here with a more detailed analysis. Rima?
Well, the stock is at a record high. It's seen a big outperformance. It's outperformed the Nifty IT index by close to about 30%. And with that, it's trading at premium valuations. Its F520 PE is close to about 19 to 20 times versus an historical average of only 15 times. As you rightly pointed out, the dollar revenue growth is seen at about 4%. The company itself had set expectations. In their Q3 conference call, they indicated that growth in the March quarter will be similar to Q2 and Q3, which is a range of about 3 to 4%. They also added that margins will be flat sequentially. So in Q3, EBITDA margins were at 15.1%, and that should be the picture this time as well. And profits, according to our poll, should be higher by 4% on a quarter-on-quarter basis. The key reason for this optimism on Mindtree, one was a very strong performance in Q3, a big beat compared to expectations, which is what drove the re-rating. But even other factors like the issues they faced with their large clients seem to be behind them because the company delivered strong growth in their top accounts in Q3. Their margins have been improving after crunching down in FY17. So in the last 2 quarters, margins have improved by 400 basis points. Their digital portfolio is 44% of their revenues and growing well. What the street wants to see is an improvement in their new deal wins, because the new deal wins didn't pick up in the last few quarters or improved on a sequential basis. So that is something which will be tracked. And the management does not give you a quantitative guidance, but up until now they've said that growth is usually better than industry leading. It will be better than NASSCOM. It could be a double-digit growth. So some outlook from the management on the FY19 revenues and margins will be closely tracked.
All right, thanks, Rima, so much for that. Well, it's Akshay Tritiya today, the gold buying festival in India. Yash is joining in with a ground check from Zaveri Bazaar. Yash, are the crowds, piling up? Is there a lot of buzz, or is it pretty empty out there?
Well, this street of Zaveri Bazaar has been experiencing a very strong customer movement and have been buzzing since morning. And what I've been given to understand from the shopkeepers is that they are experiencing a renewed demand push for the yellow metal. In fact, if we talk about the first half of the trading day, there has been an evident positive trend in gold sales, and these shopkeepers at Zaveri Bazaar expect to close the day with a growth of about 10 to 15% as far as the sales for the yellow metal are concerned. What is really working for the strong gold sales this time around? If you know that, of course, the marriage season has come along with Akshay Tritiya, which is bringing a club demand for gold. Not just that, the gold prices are expected to remain stable in the short to medium term because of the threat which is being posed to the other asset classes, which is why gold is being looked at as a safer investment instrument. What is really working against gold sales this time around, what we're given to understand is that the returns, that is the most important part. Gold has been an underperformer as far as the returns are concerned as compared to other asset classes. Not just that, the price also. Gold is trading at the highest price historically on any Akshay Tritiya day. So that is being looked at some sort of discouragement as far as gold sales are concerned. Nevertheless, these shopkeepers here are going all out in giving discounts on making charges, in terms of giving various promotional offers to make sure that gold does not lose its sheen just yet.
Chat commodities, and let's chat Akshay Tritiya actually, where we have seen a lot of interest actually continuing in case of the gold buying in the Indian markets. It is the most auspicious day. This is the biggest gold buying festival that India really celebrates, and the kind of feedback that we are getting in from jewelers big and small is that there are good footfalls being witnessed all the way across in Maharashtra, in Ahmedabad. We have those kind of reports coming in from the southern part of India as well. And the expectation really is that we perhaps are looking at anywhere between 10 to 20% of a surge in buying interest as compared to previous years. So those are big numbers that the markets are looking at. The gold prices in the meanwhile are trading quite flat in India right now, and it also is about the discount that the Indians are looking at $2 to $3 from what it's trading in the international markets. But there are a lot of geopolitical concerns, weakness in US dollar, tightening of monetary policy across globe, and all of that, of course, would impact the gold prices. To understand on where the gold prices are headed from here on, we are now joined by Mark To, who's Head of Research at Wing Fung Financial Group. He joins us on a phone line. Mark, hi, good to have you. In India, we are celebrating Akshaya Tritiya, which is the biggest gold buying festival, where Indians do go out and buy some, symbolic or even a token of gold. What is your sense to all the consumers or people who are buying gold today? Where can they expect the gold prices to go from here on?
Well, thanks for having me. I think gold is always a symbol, a very good symbol, and not just for tradition, but also for value. And actually, for the past decade or so, we're looking for something real, because we can see that the central bank have been giving us the QEs and all these kinds of things. The liquidity means that we have to look for something for the real value of the money. But actually, from the last year or so, we can see that the pace of tapering or even the interest rate hike has been rather rapid, and I think that it has become a consensus that the market participants have been forming, that the Fed is going to have 4 times interest rate hike in this year, basically once per quarter, and I think that it is rather rapid. And although the economy is recovering, we are still facing some kind of uncertainties because of geopolitical tensions, the trade war, etc., etc. So at this moment, we're going to see the gold price jointly determined by 2 forces. One is the geopolitical tensions that give support to the gold price at around 1330. But on the other hand, we can see that the upside is rather limited, at least for the short term. We can see that 1400 is rather rigid as a resistance level, because in the long run, we can see that the opportunity cost of holding a non-interest-bearing asset like physical gold is now increasing. So investors are making such kind of rational decisions, despite the fact that gold is still the symbol.
Sure. So what is your sense on when it comes to the investment demand? Because we do understand that in the last couple of years, it really has been equities which have given better returns than gold. But would you say that gold in that sense also, if you have it on your portfolio, does give that kind of a support or a diversification, if nothing else? I mean, that stability.
Well, I think gold is more than a symbol in a well-diversified portfolio for a mature and rational investor, especially in uncertain or turmoil times like these. We are going to have at least 5% or even 10% for our portfolio, despite the fact that it is a non-interest-bearing asset. We are looking for cash flows from it per se. We are going to look for some kind of a risk reduction, because we can see that for the past 200 years or so, even though the monetary systems have been changing, we are still looking for something solid, and gold actually has that kind of a status, and we have that kind of status symbols, and because people believe in gold, and that's why we are still seeing a strong demand from all over the world, and that's why I think, as you said, diversification is very good. Is a very good reason, and in addition to it, we are going to have another reason, because if you have good timing, we can actually time the gold trading in the short term to align with the central bank's actions or the expectations or even the changes of expectations regarding the central bank's actions. And I think it is a very good trading strategy, at least for the quarterly or even the annually portfolio diversification.
Point taken, Mark. We'll let you go at that. Thank you so much for joining us. Well, that's the reaction or the advice coming in from Mark To, who says that rational and Mature investors will always include gold in their portfolio, and a 5 to 10% of a diversification or a holding in gold is perhaps the way to go forward. Fayaz Udani of Kotak Commodities as well joins us to talk more about that. Fayaz, hi, you heard Mark, and I think it was quite rational and mature advice that he gave. What is your sense? Today, of course, we have seen some profit taking come in for the gold prices, but what is a near-term or a slightly longer-term outlook that you can give on gold?
Well, Manisha, first thing, I'm quite happy that 31,000 has been taken off in the Indian markets. I've been saying that it's a matter of time that 31,000 level has been taken off in Indian markets. The broader range for gold in the Indian markets is now 30,800 and on the higher side 32,000. No doubt in the international market, the range is still narrow of 1330 and 3060, but with the geopolitical tensions and with Trump being giving news every now and then, which is supportive for gold, I am very sure that gold prices will increase in the international market also. One more factor which probably we are missing here is the USD INR. The broad range of USD INR has been 63.5 to 66 for last 6 to 8 months. Now we are on the higher side of the range, and if we look technically, we feel that probably the uptrend in the US dollar has been broken, and rather we expect the Indian rupee to depreciate further in the coming time. And if the markets are able to sustain above 66, then probably we feel that the new band would be 66 to 66.8, which will be again supportive for gold. Saying that from a near-term perspective, we feel that gold is a good buy on MCX at the level of 31,280 for a target of 31,480 and a stop loss of 31,170.
And you know, when we started this year, Fayaz, we were talking so much about silver, and that seems to have completely been lost right now. A lot of us were bullish, but it hasn't held on. It hasn't seen that money flowing into it. What is your sense at these current levels?
Well, I think silver as of now is not sure which way to go either on the base metal side or to go on the bullion side, and saying that it continues to trade in the narrow range, currently hovering around 16.75 in the international market and in the narrow range in the domestic market. With base metal clearly in trend, or rather with a lot of volatility, and with gold clearly in trend, I think silver is not something which probably the funds or the speculators are right now looking for. So the focus is clearly on gold or crude oil or let's say aluminum right now in the international market.
But silver seems to be doing slightly better than gold today. When Indians do go out to buy, it's not just gold that they restrict themselves to. Silver also is a part and parcel on buying in sense of Akshaya Tritiya. If you had to buy something today, what would you want to go for?
Well, out of gold and silver, I am clearly bullish on gold. Saying that if it is a matter of silver, then I think we can probably near-term look for a upside of around 250 to 300 points from the current levels.
Point taken. Fayaz, thank you so much for joining us.